Hi, my name is Anthony and I'm with Signature Card Services. Welcome. Today we're here to talk about how to read a merchant statement, specifically a merchant statement where the rate is fixed. And what I mean by that is that there are companies that charge a fixed rate under a three-tier system, and we call that three-tier system a qualified rate, a mid-qualified rate, and a non-qualified rate. This is the first example of what a tiered merchant statement looks like. You'll notice in the first section, it identifies the name of the associated company that you are accepting credit cards payments with. It provides the month end. So again, a merchant statement is a summary of what occurred from that previous month. In this example, the month ending is February 29, 2016. It also will identify your merchant account number, and a merchant account number is a number that identifies you as your business in addition to the name of your business. This statement includes the checking account number that is on file with your credit card processing company, and then the addressee, the name of the business, which would be your DBA, and then doing business as, and your corporate or legal entity. Additionally, you will notice that there's a telephone customer service phone number for you to readily access in case you have any questions or concerns regarding your statement. In the middle section here, it specifically talks about messages that are super important that you actually take the time to read. This is how most credit card companies communicate to their customers. At the end of the first page, it also summarizes the total charge to your account. And this is the amount that is deducted from the checking account on file. And typically, this fee is deducted the first week of the following month. So this is page 1. So moving on to page 2. Again, the first section is a reiteration. Page 1, really information about you and your company, your associated MID, the name of the company, where the statement is coming from, the month, and again, a good contact number. In the middle section here, it specifically is talking about what we call summary of card deposits. And really, this is a quick glance of looking at what you did for the month. In this example of February, it lists the card types: Mastercard, Visa offline debit, Visa, and then Visa offline debit. And obviously what Mastercard, I think everyone understands what Mastercard means and everyone understands what Visa means. Mastercard offline debit, all that means is that the merchant accepted a check card, and again, a check card is a card that is issued to you by your bank that does not require a PIN, but instead that is ran like a credit card but debits your checking account. So that's what the card types are. It lists the number of transactions that were taken for that month based on that card type acceptance, the total sales for each of those card type acceptance. If you had any returns, it would list the number of returns along with the associated amount of returns, and then the net. So the net would be sales minus the returns equals the net. It also summarizes in total here how many sales you took for the month, count and amount, and how many returns you had for the month, the count and amount, and then the net again. And then this statement finally provides you a year-to-date glance as to how many sales in terms of volume was processed for the year. The third section here talks about summary, what we call summary of card fees. And this is actually more detailed that is related to the summary of card deposits. And as you can see, the statement here breaks down the card type acceptance. So the first section is Mastercard and all that it encompasses. And we had talked about earlier that the merchant statement, in this example, is a tiered structure. So what I mean by that is that there's 3 levels in which a merchant can qualify in terms of fees associated with taking that specific card. So for Mastercard, in this example, what we call the mid-qualified rate. Mid-qualified rate is the middle tier. The non-qualified rate is the last tier. And then there's actually another one here that's not on the Mastercard section, but there's the very first tier that we call the qualified rate, which is the lowest tier or the lowest rate. What the statement does here it actually breaks it down for you in terms of sales for Mastercard, and this is for credit. How many sales amounts qualified at the best rate, in this example is mid qualified, which is again the middle tier, at the associated rate that's on file for this merchant. And this example it's 25 basis points. So the statement reads, what it does here, it takes the total amount of $24 times this rate equals the charge in accepting those cards that cleared at that rate. Moving on, the non-qualified rate again is the lowest tier. There were $65 worth of credit sales at 0.0339, so you take the 65 times this rate equals the $2.20. This merchant has what we call other item fees, and all that really means is that on top of an authorization fee, every transaction that is approved and settled meaning that the merchant gets paid for the transactions, is assessed what we call an item fee or a per tran fee. In this example, there were two of them at 12 cents each, equal 24 cents. And the other item here that we refer to as dues and assessments. So dues and assessments is a card brand pass-through fee for accepting Mastercard. It's a percentage that is calculated based on the total acceptance for that month. In this case, that amount ended up being, the total fee to the merchant was 10 cents. Moving along, we run into what we call the authorizations and AVS. Authorizations are where the merchant makes an attempt to get an approval on a credit card transaction. Now, whether the transaction is approved or declined, this fee is based on attempts. So in this example, the merchant for Mastercard under credit had 7 attempts. At 7 attempts at 12 cents each is 84 cents. In this example, the merchant did not run what we call AVS, so that's Address Verification Service. This is a program that was set up specifically for merchants in a card not present environment, meaning the terminal will prompt the merchant to enter the numeric address of the cardholder. In addition, enter the zip code of the cardholder. Once that information is entered, it goes along with the attempt to authorize the transaction. If the transaction is authorized or declined, the terminal will respond with that information. And then it actually also checks the AVS information on file with that issuing bank, and it sends a letter acknowledgement, and that letter acknowledgement could come through with a variety of explanation, but ideally it's either matched, partial matched, or no match. In this example, again, this merchant is not in that environment, which is why that fee did not apply. So moving on to the next card type, as I mentioned earlier, Mastercard offline debit. In this example, this merchant had some qualifications, meaning the lowest rate. There were $55 that fell into the qualified rate, again, the lowest rate at 0.0115. You take the 55 times this rate equals 63 cents. Mastercard offline debit. There was $30 that qualified for the middle rate at 0.025. You take the $30 times this rate equals 75 cents. And then finally, the highest rate that we refer to again as non-qualified, there was $86 worth of that times 0.0339, and that equals out to $2.92. And again, as I described earlier, there's what we call other item fees or per transaction fees. There were 6 of them under the Mastercard offline debit, so 6 at 12 cents is 72 cents. And then again, the card brands charge what we call a pass-through. So any fees associated with taking that card type, such as dues and assessments, are passed along to the merchant. In this case, it's a fixed rate, and that rate ended up being the cost to the merchant of 19 cents. So in total, for the acceptance of Mastercard, the total fee under offline debit is $5.21, and then the total fee for Mastercard credit is $3.98. It's really important to focus on these numbers because you'll find out on the following page. So moving along, Visa, none of the transactions that this merchant accepted actually qualified for the lowest rate or the middle rate, but instead the highest rate, which is why we call it non-qual disc. $41 at 0.0339 arrived at $1.39. And again, the other item fee, so there was one transaction at 12 cents, equal 0.12 equal at 12 cents. and then again dues and assessments, and that ended up being at 5 cents there. The authorizations associated with taking Visa credit, there were 3 attempts at 12 cents, which is 36 cents charged to the merchant. And then there's another pass-through fee, almost like the dues and assessments here. We call that fixed acquired network fee. There was one, and that was at $2. So in total here for Visa credit was $3.92. All right, and the next section is we again refer to Visa offline. This merchant actually had a great qualification in this example where they did receive the lowest rate, $765 at the rate of 0.0115. You take the 765 times this rate equals $8.80. And then there was a couple, so none of them qualified for the middle tier, but instead the highest tier, what we refer to as non-qualified disc, there was $307 processed under that tier that were charged at the rate of 0.0339. Take the 307 times this rate is $10.41. The other item fees, as I described previously, there were 34 of Visa offline transactions at 12 cents each, was a total of $4.08. There's a dues and assessment. Again, dues and assessments are is what we refer to as all fees associated with accepting this type of card, the particular card brand, in this case Visa, that is passed along to the merchant, and that's $1.18. So moving along to page 3, we're actually going to finish what we talked about on page 2. It's an extension of the summary of card fees. Again, we were referring to Visa. So for Visa, there was a total of 25 attempts for authorizations, and that was 12 cents each. That's $3. And then here's a different type of pass-through fee that is assessed by the card brands. In this case, we refer to this as transaction integrity fee. There was 14 of those at 10 cents as $1.40. And then again, to summarize this section, particularly to Visa offline, it was a total of $28.87. The next section here reads about less discount paid, and all less discount paid means is that in most merchants' environment, there's a daily discount that is taken from the merchant's batch on a daily basis, or whenever a merchant actually has a batch to settle. And this less discount paid is typically charged by the qualified rate. So in taking all the transactions that occurred for the month times the qualified rate, the merchant in advance, this is what this is saying, has already paid $16.42 of the total amount due. So if we add up all the subtotals of each of the card brand types, less what the merchant's already paid, equals the total card brand fees of $25.56. The $25.56 carries on to what we refer to the next section as summary of miscellaneous fees. As you can see here, it really carries over from one section to the other. So again, total card fees is $25.56. And in this example, there's what we call a batch header fee. So every time a merchant closes a batch, there's an associated cost with that. In this example, the merchant processed 4 batches for the month of February at 20 cents each, was 80 cents. So if you take the $25.56 plus the 80, the total charges is $26.36. And this is the amount that is debited from the merchant's checking account on or about the first week of the following month. Moving along, the summary of monetary batches just summarizes the batches that the merchant had for the month. As you can see the dates here, February the 1st, the 2nd, the 19th, and the 23rd. It shows the total gross sales of that batch, if they had any refunds or corrections related to that batch, and then if there was a net. And as you can see in this example, there were no refunds or corrections, so the gross actually matches the net. If there were, this net number would be a lesser number. And there's a reference identifier here that ties into that batch for those particular days. Moving on to the bottom of page 3, this actually will summarize all the card types and all the batches that were taken for that month. It actually breaks it down from one day to the next. So in this example, February the 1st, there was a total of 14 transactions for $492. Again, there was no returns or adjustments. Adjustments are also referred to as chargebacks. In this case, there were no chargebacks, returns, or any kind of adjustment. As a result, the total discount that's taken based on this batch is $5.66. And what's happening here in this example is they're taking the gross amount minus the daily discount amount of $5.66 nets out to $4.86 and 34 cents. And then again, really kind of carries on to the following days within that month, February the 2nd, the 19th, and the 23rd. As you can see here, they had, again, a batch of 10 transactions at $2.18, no returns or adjustments. What that rate, the discount looked like for that batch was $2.62, so $2.18 minus the $2.62 is $2.15.38, and then so on. Here on the 19th, 15, total amount of $5.64, no returns or adjustments. The $5.64 times the qualified rate, which is the daily discount amount, is $6.80. So $5.64 minus the $6.80 is $5.57.20. And then on the 23rd, the same here. You'll see that $99 in total batch. 99 times the qualified rate for that discount that was collected is $1.34. So 99 minus $1.34 is $97.66. And so that's the end of page 3. So moving on to the final page, as I described earlier, this is again kind of what we call header information. It tends to run on all the pages of the merchant statement for ease and reference. The middle section of this last page refers to the reported gross sales that were sent to the federal government. As you may know by now, the federal government actually monitors all merchant transactions, so this information is reported to them in total gross sales. So this is the month, February. Here's the description, gross reportable sales. The TIN number, typically, depending on how you're structured as a business, whether you're a sole prop, partnership, corporation, limited liability, this is the TIN information that is associated with the federal government. This is the total amount that was reported for this particular month to that agency. And then moving along here, the total year-to-date gross sales that have been reported, which is $13,887.02. And again, there's a bit of a disclosure here, letting everyone know that, per the rule here, all the total amounts that merchant accepted in terms of credit card acceptance are required to report as sales. The last section of the merchant statement is what we refer to backup withholding. In this example, it again refers to the month that we're talking about, February. The entity is the Fed. No monies were withheld in this example. Typically, the only time that funds are withheld is that if the merchant does not have matching information that is listed with the Fed. When there's not matching information, the matching information could be the TIN that we referred to earlier. It could be the name of the business. It could be the address. And when there's a discrepancy, it creates sort of an alert to the Fed. And as a result, every credit card processing company is required to hold a percentage held back until that issue is resolved. It's sort of an assessment per se that, again, that is handed over directly to the Fed. And then there's a year-to-date opportunity here, but in this example, nothing was held. Here's a second example of how a merchant statement could read. We're on page 1. The first section really identifies the entity in which you have a relationship with in terms of accepting credit cards. It identifies the month, what we refer to as your merchant account number. A merchant account number is a number that is associated with the name of your business. It has the routing information of the checking account on file, as long as with the checking account information that's on file. The total amount deducted is very clear here, so you have a good understanding exactly what was deducted from your checking account. This typically is deducted the first week of the following month. In this section here would be the name of your business, your address, your address. The next section, plan summary, is exactly that, a summary of all your transactions for the month. If we start on the very first column to the left that reads plan code, you'll see all these abbreviations, VS, VD, VB. At the very bottom of the page, there's actually a legend that describes what does VS indicate. So VS equals Visa, VD is Visa Debit, and VB is Visa Business. And again, you can refer to these plan codes and then refer to the legend to help better describe exactly what these rows are referring to. The next one is the total number of sales that were processed for that card category. The next one is the amount of sales for that card category. And in this case, there are no credits, whether that be the number of credits or the amount of credits. And then the overall net sales. So your sales minus your credits would be equal your net. Again, in this case, no credits, so then obviously the sale amount equals to the net sales. And then with that, the average ticket that's based on that card category. And then at the very bottom here, they're also summarizing all the transactions and amounts, so you can see at a glance exactly how, in total, how many transactions were processed and the total sales amount, as well as the net, and as well as the average ticket. And then in this case, if there was a percentage applied to this account in terms of discount, discount is the fee that we charge on the daily basis. You would see that indicated here. In this case, this merchant is not set up for that. It's set up for a different type of collection of fees, which is why the fees are at 0 at this point. Moving on to the final section of page 1 is deposit. So this is really a deposit summary, again, that really itemizes all the activity that occurred for the month. It takes it by the day, the reference number. It identifies what they refer to as the tran code, the plan code, the amount of sales, the amount of transactions, again credits, and then the discount that was paid according to that sale, and the overall amount that was settled. So if you look at the math here, you want to take the number of sales minus the discount paid equals your settled amount. Settled means that this is the amount of money that was funded to the checking account on file. So moving along to page 2, which is a continuation of page 1. Again, as I mentioned earlier, this is a summary of what occurred, the remaining days of that month in particular, and then again, like every section, it summarizes exactly the total amounts for each one of those columns, respectively. The next section is specific to fees. The first fee is what we call an authorization fee. So an authorization fee is when a merchant makes an attempt to authorize a transaction, and this fee is based on attempt. So whether it's approved or declined, you're charged that rate. So in this example, there was 564 authorizations that were attempted at 12 cents per attempt. If you do the math, 564 times 12 equals $67.68. So that completes this section. So the total authorization fees is $67.68. Moving along to what we refer to as the Interchange American Express program fees. So this is the fees that are associated with processing transactions, specifically regarding discount. So you'll see here as it reads Visa mid-qual discount, Visa check card mid-qual discount, Visa non-qual discount, and Visa qual discount. So as we have previously talked about, this merchant is what we refer to as a tiered merchant, meaning that there's a tiered structure in terms of the discount fees, the percentage of the fees that we charge this account. This is just one example of how a merchant statement can be structured. And again, what it does here, it literally itemizes all the transactions that fell within this category for each one of these card types. So I'll just read the first one. So there were 6 transactions under what we refer to as Visa mid-qual, a total of $221 at 2.5%. So if you take the 221 times the 2.5%, will equal your $5.53, and then so on. So what it also does in this section, it actually will total the interchange fees, American Express program fees. It summarizes all that. So in this section, it's $197.54. The next section refers to what we call transaction fees, and literally a transaction fee it's a fee that is collected that is different than the authorization fee. This fee is only charged on what actually gets approved and settles to the merchant account, and then eventually gets paid to the merchant. So in this same example as the one above, statement breaks out the card type acceptance. So the first one, I'll go through the first one. The first one, there was 363 Visa check card per item fees. So per item fee is really the same as a transaction fee. In this case, it's 12 cents. So if you take the 363 times 12, that equals to $43.56. And if you apply that across all the card acceptance here, you do run into, again, a total for this section. There is a bit of a difference here, as you will notice. You see that it reads Star Online Debit Fees, Interlink Online Debit Fees, Maestro, and Pulse. And what this is specifically referring to is that this merchant account is set up to accept what we call PIN-based debit. And PIN-based debit is when the cardholder presents a card to the merchant that requires a PIN. And typically in this environment, that means that those monies will be automatically be withdrawn from the cardholder's checking account. So Star, Interlink, Maestro, and Pulse are what we refer to as debit networks, specifically PIN debit networks. And PIN debit networks have different fees than a credit card fee, which is why it's laid out a bit differently here. So in this one example here, this merchant took 28 transactions that used the Star network, PIN-based debit network, for a total of $826. So again, if you take that, and by the way, each network has a different cost in accepting that card or that network. The cost is not outlined here, but if you take the total amount times that cost, it'll equal to the amount, the total here at the end. So that's really important to take a look at. And then down here as well, as we were charging for credit per item fees, there's also a charge for PIN-based debit per item fees. As you can see, the rate is different than credit. Credit was 12 cents, and the PIN-based debit tran fee is 20 cents. And this, again, this is really varies on how the merchant account was structured, and based on that, the approval of the merchant. And so there's a clear understanding as to why that is. Okay, so moving along to the card brand fees, I would refer to this as what we call pass-through fees. So the card brands like Visa, Mastercard, Discover, and Amex charge what we refer to, again, pass-through fees. So pass-through fees are any fees that are charged by the card brands in order to be able to accept that card in the merchant's environment. And so these are really all pass-through fees. As you will see, this VS stands for Visa, MC stands for Mastercard, and Discover stands for Discover. So these are the transactions that were associated with these pass-throughs. There was 24 for this Visa NPF fee credit at this rate, at 0.0195. And then based on the total volume that was processed for that card pass-through fee, it's 47 cents, and then so on. And the same here, this is another pass-through, this Visa assessment, Mastercard assessment, and Discover assessment. Again, the card brands have fees that they charge that are associated with accepting the credit card for that particular card category. So this one actually, what it does here, it tells you, okay, there was 387 transactions for Visa at this amount of volume times this rate equals the total fee here. So if you, again, in this section, if you take all that, add it up, that's $25.30. All right, so moving on to page 3. So on page 3, again, at the very top, it just provides the originating source of the merchant statement, some basic information of the month that this statement covers, your merchant account identifier, again, that ties into the name of your business or the name of your company, or your legal entity, and then the routing number on file along with the checking account. And then again, another reminder about, based on the summary of all how the statement read, the total amount that was due that is deducted the first week of the following month. So as it reads here, this is a continuation of page 2 that described the fees. And now we're moving along to what we refer to as other fees, or I would also call them miscellaneous fees. And these are pretty standard fees. So in this example, there's a $10 statement fee. So in order to produce this statement and mail it out to a merchant, there's a fee cost associated with that. In this example, it's $10. So if you just come clearly to the right here, you'll see the total there for 10. All credit card companies that provide merchant services are required to provide the IRS information regarding the merchant's activity on a monthly basis. And as a result, the IRS imposes a fee to do so, and the credit card company passes that along to the merchant. So in this example, that was $1.95. So moving to the right, you see the summary for the $1.95. And in this case here, this online reporting fee is really that it's a fee to access your information other than the merchant statement, to access it via online. In this case, it's $9.95. So if you bring that across here at $9.95, So really in total, if you take all those sections that we talked about on page 2 and then here on page 3, you collect them all, the total fees due is $434.84. So in this section here, it actually summarizes what the fees are due. So $434.84 is really carryover from here. In this case, this merchant already in advance paid $197.60, and that was a result of qualified discount. Typically in this merchant environment, any merchant that has a qualified discount is set up at what we call daily discount. We collect those fees up front. So if you take the $434.84 minus the $197.60, you have a net due of $237.24, which actually ties up into here. And this amount of money is deducted from the checking account on file the first week of the following month. And then to finalize this is good information. It actually provides you the overall acceptance of the type of cards you accepted. Typically this is in a colored environment, so it's much easier to read. As you can see, it lists all the card types. And then this is a quick overview of a year-to-date glance of kind of where you're at in terms of processing, in terms of volume, in terms of the month. And again, it gives you year-to-date information, and that number is 104,000.